Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. The mess in the US is getting worse as retribution is ramped up. Markets are getting nervous. First, the US government shutdown is masking official data that would show growing troubles in their economy. Today, the Challenger job cut report for October revealed that softening consumer demand, the shutdown, AI adoption, and higher tariff taxes are driving hiring freezes and actual labour force reductions. This report said there are 153,000 layoffs in the month, the most since 2003. For all of 2025 so far, there have been more than 1 million people laid off as counted in this survey. Hiring activity is slowing fast. The last time it was this bad was in the first Trump presidency in 2020, but there was an excuse then. This time it's all on his policies. Meanwhile, the New York Fed's Global Supply Chain Pressure Index has eased again as US consumer demand falls away. Financial markets reacted badly to the job cuts report, going into a more risk-averse mode. That had the effect of punishing commodity currencies as a second-level consequence. And a new shutdown pressure is about to hit the US. The FAA is restricting air traffic control services to many airports because they can't pay the controllers, and rostering the ones they can pay is a safety issue. In true Trump style, the cutbacks will focus on states with Democrat governors. Large numbers of flights are being cancelled today. And the US has added 10 minerals to its critical minerals list. Being on the list invokes a US Section 232 legal probe for potential tariffs and trade restrictions. It is a stick used to beat its trading partners and gives Trump-supporting investors cover to profit from reopening unprofitable US capacity. In Canada, they have released the 2025 budget, and it's a bit unusual. Rather than focusing on short-term benefits, even in the face of painful reactions at the US border restrictions, they have chosen a long-term focus to reorient their economy away from US dependence. It will no doubt bring short-term political stresses, but it is an unusual approach by a democracy. More like the Chinese approach. Carney is betting Canadian voters will have the patience for the payoff. His opposition smells an opportunity. Meanwhile, across the Pacific, Taiwanese inflation picked up from its unusually low 1.3% rate in September to 1.5% in October, a level they've been at for the prior 4 months. And there were 3 central bank rate decisions out overnight, and all held unchanged. Malaysia at 2.75%, Norway at 4%, and England also at 4%. In the EU, they measure their retail sales on a volume or inflation-adjusted basis, and in September it eased lower from August to be 1% higher than year-ago levels. The weaker September was less than expected, but the year-on-year gain was as anticipated. In Australia, their merchandise exports are rising fast again. They were up 7.9% in September from August, up 10.3% from the same month a year ago. But the surge is largely due to exports of gold, which took an unusual breather in August. Mineral exports are up 9.7%. Rural exports were only up 0.7%. Interestingly, it was China and Hong Kong that drove the demand. But also exports to the US rose by almost a quarter despite the tariffs. Those tariffs have had little impact because the Americans themselves are paying them, taxing themselves. The rise of global container freight rates we noted last week is pushed into its latest update, up 8% for the week, and to take it to 39% lower than year-ago levels. Outbound cargoes from China are driving the resurgence. US importers are resigned to paying the tariff taxes, and Europeans are taking advantage of Chinese desires to pivot away from dependence on the US. Meanwhile, bulk cargo rates rose 3% in the past week to be 41% higher than year-ago levels. Another measure of global shipping's prospects is the Danish shipping giant Maersk's share price. It is up 1.3% for the month, up 20% from a year ago. Much of their optimism is centred on China. The US Treasury 10-year yield is now at 4.08%, back down 7 basis points from yesterday at this time to the prior day's level. And the price of gold will start today at $3,979 an ounce, down $3 from yesterday. American oil prices are $1 lower, at just on $59 a barrel now, while the international Brent price is just on $63 a barrel. And the Kiwi dollar is now just under 56.3 US cents and down 30 basis points from yesterday. That makes it at its lowest level in 7 months. Against the Aussie, we're holding at 87 Australian cents, but that's a 12-year low. Against the euro, we're down 50 basis points to 49.8 euro cents. That all means our trade-weighted index starts today at just over 60.9 and down 40 basis points from yesterday, basically equalising the April dip and its lowest since July 2009, a 16-year low. And the Bitcoin price starts today at $100,519 and back down 3.2% from yesterday. Volatility for the past 24 hours has been modest, at just on plus or minus 1.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.